May profits be upon you. Ooh, I caught a good one today. Man, oh man. Friday morning was a good morning for Mr. RT Money. Yes, sir. I'm going to go over this whole thing for you. I'm going to show you just how I got into this trade so that maybe it might inform you to the point where you could catch it yourself on the next go. This is my bread and butter, my bread and butter. All right. Now, this is what we're going to do. We're going to hide all this mess. Where can I hide? I can hide it with this. Thank you very much. All right. Now, what are we doing? You know what? Yeah. We're gonna do replay. All right. Let's do replay. This is the 8 o'clock bell. I get on my charts around 7-ish, 7:01. And let's do this like the cutest. All right. Now, what do I do when I first get on the charts? First thing I want to do is go to the 1 hour. All right. Depending on what I see, I don't even have my Asian thing. I mean, my session on here yet. All right. My session separator. All right. We're looking at the 1 hour, right? And what am I noticing? I'm noticing that we're looking very bearish with lower lows, lower highs, right? All the way down. Where's the last break of structure? The last break of structure is here. All right. So after a break of structure, what do I expect? I expect price to come back up and return to impulse, right? That didn't happen. We got this descending correction going on. All right, after this impulse, we got this descending correction. So I'm like, man, okay, well, now I'm going to be looking for, you know, a what do you call a transition of price from bearish to bullish momentum, right? I'm going to be looking for that transition over here. And I'm thinking, hey, man, looks like we got signs of that happening. Boom, boom. I triggered it. I triggered it. That's my bad. Okay. That's my bad. So let me get rid of that again. Nope, that's the wrong one. Which one was it? Thank you. All right. So I'm looking at this low, and then this low, right? So yeah, now again, now I'm looking at my I'm putting on my session indicators, right? And I'm going to go in close. I'm going to go down to the 15-minute. So I got my bias, right? And I'm looking for price to transition so it could return to impulse at some point, right? 15-minute. All right. What am I looking at? I'm looking at this correction here, and I'm looking for signs that price is transitioning. You know what? This is going to drive me crazy. So I'm going to get rid of all of this. Okay. And I'll just do it all over. I don't mind. All right. But you know, there's something else here. Yeah, I use an indicator. But you see these markings here where I have lower London high, Asian high, you know, I previous daily low. I don't want to get rid of all of that. So I'll just hide it. All right. Anyway, so that's one thing. That's one thing you want to make sure that you have when you sit down at your charts. You want to have done some work the night before you go to bed. You want to put on things like the highs from yesterday, the previous daily low, the previous daily high. All right, because you know that there's liquidity laying at those areas. Then you also want to look to see where the sessions ended. Now, so you can use this Asian session range by FXN, right? You can use the Asian session range, and you can look on here You see the blue color here? That's the Asian range, right? And it's kind of hard to see. You can see this is the Asian range, the highs and lows of it. And you see that when London, this blue line represents London, the start of London, you can see that price went up, came down and double topped up here, right? In this bearish order block, in supply, it came back to mitigate this supply, this order block, right? Formed a bearish engulfer, a very strong one, obviously, very aggressive. And you see how price broke that low it created. All right, now this low was supposed to be a higher low that creates a higher high. That didn't happen. This ends up being a liquidity point that price comes down and takes. But this is now a swing low that price broke. Okay, remember we're on a 15-minute time frame, so I'm looking at that. We broke that high. We broke that swing low. We broke this low here. All right. These points are very important, man. You break two short-term lows, you're looking for a return to impulse. If you break a bona fide higher low that created a higher high, you know that you just broke structure and you're looking for that return to impulse. Now, when price breaks it, you immediately come up here and you say, okay, where am I going to get that return to impulse? All right. The first place I'm going to be looking at is this, and then the originating order block where this had a very strong reaction from. Okay, I'm looking at those two. So I'm looking here for price to come up and tap that. Why are you doing all this? Why are you doing all that? I'm looking for it to tap that, right? I'm going to make it nice and colorful so that you can see it plainly. All right, this would be what I would look at as the return to impulse, and price did in fact work its way like magic, breaking structure along the way, and did find itself in this returning to this impulse order block here, mitigating this order block. And this would have been an excellent, I didn't say a little bit, I said it would be an excellent entry for a London short. Now, I don't trade during London. This setup came right around 6:30, 6:45, and that's before my time. All right. So at about this time, I'm getting a feel of where price is going, and I have order blocks that I've singled out already, and I'm hoping price will come back. Now I want to go to a lower time frame because we're getting close to showtime, and you know what showtime is? That's my 8 o'clock bus for the open for New York session, right? So price did come back up, return to impulse. This would have been a great entry to take short. Now, you have to notice that it made a higher low here, all right? And you should always mark these things because this represents what they call sell side liquidity. These points here have liquidity. This is where people have stop losses to take longs. People have pending orders for shorts because they're waiting for breakout trades here. So all of these points have liquidity, and price will go to that liquidity because that's what moves price. It goes from internal liquidity looks for external liquidity, and external liquidity looks for internal liquidity. All right, it'll turn inside. It'll create why am I pantomiming it? It'll create these highs and lows, right? And everything inside here is internal liquidity. And what will price do? It creates these highs And each time it comes up and takes the stop losses that are up there, all the liquidity at these points. And then it comes down and sweeps all of the liquidity down here. That's internal liquidity. This now becomes external liquidity. And once you break this low, it'll start doing its thing. It'll do a retracement. Now this becomes external liquidity. Got it? And it starts the whole process over again. Either it'll break this high, make a higher high, or it'll make a lower high and come down and sweep again, just like this one. That's the way it works. All right. Let me continue on with this thing. Now, we're getting down to the nitty gritty over here. So you see what time it is, right? It's 7 o'clock. I'm going to advance price. I'm not in this trade, but somebody should have been in the taking a short here. Why? Because we have a couple of reasons why price would want to come down. All right. It's making the higher high after making this higher low, broke this structure to the upside. We hit a bearish order block. We are mitigating that order block in supply. We should be heading down to make a higher low, right? Makes sense to me. All right, look how we're coming down, like boom, right? Now, price gives us, what time is it now? 7:10. All right, I'm going to advance price a little bit more. Now, you see how it doubles up in here in this supply? It's mitigating again. And what did it do? It broke structure to the upside. That's a break of structure. That isn't a liquidity grab because it has a close. All right. So are we going to break these highs, or are we just mitigating, retesting the supply here? Look at that. We respected that high. Woo. These are the protected price points. See that dollar sign up there? I have it over here. If price breaks that high, then we take that liquidity there. All right. And if that happens, I know, with a wick, I know we're going to be crashing down, because that's what price does. Takes that liquidity, goes the opposite way because it's looking for that liquidity, building it up, and then comes down and takes these lows, all this internal liquidity. That's what it does, so it can make the more significant move in the intended direction. All right, now, what time is it now? 7:20. Let's advance a little bit more. This is another chance to get in on a nice short here. All right, this one was kind of short-lived, right? It went higher. But if you enter in on this, you always put your stop loss above the order block in which you enter. Okay, so this is what is this? This was a 15-minute order block. All right, if we refine this to a 5-minute order block, we would be here. Okay, just understand you don't want to over refine your order blocks. You know what I mean? You can do that real easy. This might have been about a 10-minute order block, and that's where you would have got in. You would have put your stop loss right above here anyway, and that would have probably put you about 5 or 6 pips. But that's where you want to make sure, you don't panic. You see price do one of these numbers. Hey, I thought it was going to go further down, and it starts coming up at you. Don't panic. Let it hit the stop loss and take the loss. I'm telling you, don't tinker with it. That's a bad habit. TP or stop loss. Dig? All right. Now, let's move on. All right. Price is coming down. It's given signs of exhaustion with those wicks. Should be coming down. I don't have these little head and shoulder blue marks there for no reason. All right, so we know it's coming down. Here it goes, boom, right? Are we going to break this low? That's what I'm looking for. All right, now look what time it is. It's 7:45. This is the time I start to want to go to this is about that time where I want to look at the 1 minute. All right, because I know that time is coming up. Now, what am I noticing? You got to notice where the highs and lows are, right? From the other sessions. The Asian low is down here. That's interesting. We're way above that, found a high with the London session, right? But what did London do? Comes all the way down to that London, to that Asia low, all right? It also happens to be this orange line running through here is the previous daily low. So we know price is going to want to do some work down there. It's going to work that low, all right? We got the London low, we got the Asian low down here. So there's a couple of reasons why price is has a reason to come back down here. Maybe to break these lows, you understand? Because there's plenty of liquidity down here, all right? Well, the previous daily low is where price played around with during London. That's something that you have to keep in mind. All right, now I'm going to get a close-up on this so we can get a better look at the price action. All right, so we got a left shoulder already done, a head done. We're waiting for this neckline to break, all right, or to be equal. Now it's down here, but I love to see a break. I love to see a break of the low, because right now this is considered still bullish momentum because we haven't broken that higher low. Okay, do you understand that the structure hasn't broken yet? So that's what I'm looking for. I'm going to advance it, and we finally break. Now I can say price is shifting from bullish momentum to bearish momentum. All right, I need that close down there though, a higher time frame close. All right, so price now I'm suspicious because price only jab step down here. Dig what I mean? It just it didn't give me my hard close that I like. So I'm going to watch where this goes. If it does give me a return to impulse, where would I be looking? Where would I be looking for that return to impulse? I'm gonna tell you right now. Either it's going to stop here, all right, in which case I would put an order block, a bearish order block right there. Let me hook that up. Boom. All right, that's not a 1 hour. I don't understand how does that happen, man? Anyway, so yeah, I'm going to take that whole candle, the whole bullish candle, and then the bullish move before the bearish candle takes. So I'm looking here. It's not time yet. We got the 754. The time is coming close. So I'm looking up here at this order block. If it gets through this, I'm looking right at the head. I'm looking right at the head. We can move this because we already know what's going on up here. This whole move is where I would be tracking. Okay, let me get rid of that. All right, I would be tracking. You see that order block right here? That one I would be looking at. All right, if it comes all the way up, I got it. I got these, as long as it doesn't break that high. All right, I'm looking at the head. I'm looking here. So, you know, I'm not going to I'm not going to jump in or on anything just yet. All right, and also you have to bear in mind, you don't have to, but it would be helpful if you did. Take out your fib, look at that 50% line. Anything below that line, you're not interested in. All right, I'm looking for something up here. All right, and I'm looking for that to happen right around 8 o'clock, between 8 o'clock, 8:30, because of where it's at right now. I'm looking for that entry up here somewhere. Okay, it ends up over here, but that's fine. All right, I just want to wait until 8 o'clock. All right, let me advance. Look how perfect that was. All right, but it's not 8 o'clock yet. Look at this candle. It's not 8 o'clock. So right now I'm biting at the bit. I'm like, oh, you know, what are we doing here? All right, maybe because it's giving me a bearish engulfer there, maybe it's giving my close down here and then go up. Huh? What do you think? And we're down, and we're down, and we're down. We come back to give what appears to be a transition, right? It looks like a transition, but I don't want to be too, you know, be all up in it like that, because this one gave me a nice little transition from bearish to bullish. So I'm looking at it hard. I got a big old rejection wick there. And now look what time it is. Now I'm like, uh-oh, I'm in the middle of this thing. I'm in the middle of the trading range. And what am I supposed to be doing? All right, I got a higher low here. All right, we did have a breach here, but it was only a wick. All right, I got this high here. It looks like a left shoulder ahead. All right, I'm looking for a something over that, something crossing over that 50% so I can short this, because this is a bearish market. Does that all make sense to you? Do you add all of this up? All right, we just had this price find during London, find the London low, find the Asian low down here. We're below the previous daily low. I'm wondering, you know, are we going to make it up to the previous daily high? What are we going to do? You know, I don't know. But I do want to see, I don't want to jump into anything just right here, because this doesn't look like a good place to be entering a trade, because I'm not sure about the direction. So I let it play. I need you to understand that thought process. Okay, look at that. How many times did price try to get lower? What time is it now? 8:03. I'm not panicking. We got a bearish engulfer here. It was mitigated. All right, as if it was a bearish order block, it's not valid. It's not valid in my view, because it didn't break structure. It didn't do anything. So I'm not looking at this as a valid what do you call it, bearish order block. If I can just get over, thank you. I'm trying to get this thing so you can see it well. Okay, so I'm hoping that price continues up and does something I could recognize. Dig what I mean? All right, here we go. Look what time it is now. Look what time. Right now, you see, this is manipulation. What did it do? It's manipulating the lows over here. It did take the liquidity here. It broke these highs, taking the liquidity there, but didn't go any higher. All right. Then it comes back down, creating more low points, and then coming back right behind that to take that new low points liquidity. Why are we going sideways here? You need to be suspicious. You understand that? And you want to make sure you don't jump into anything. Look what time it is. Just keep an eye on the time. It's 8:06. Uh-oh. That's a pretty strong bullish candle. Are we on our way up? I got a bearish one. All right. Aha. We finally mitigated this order block again. Right? Are we headed down? Are we going to break this structure? Are we going to turn here? Because see how the lows are getting higher? All right. What are we doing here? We just broke this high. So, you know, what are we doing? All right. I'm thinking this is looking like a bigger version of that. And that ended up here. Dig? That's what I'm thinking. All right. We have this low, we have this lowest point, and then these two came back right at the head of this inverted head and shoulders, or this inverted quasi. I hope you can see what I see. All right. And there's a lot of liquidity here too. So I know price is going to come back and sweep those the stop losses and pending orders. So let's see. Wow, that was like clockwork. We have a break and a close below those lows. Now, do I think we're heading downtown? Is this the left shoulder instead of me waiting for it up here? I want to see it come past that 50%. Got it? I hope y'all are putting it all together. I'm still waiting on this area to be hit. Okay. And I'm worried that I might have missed my bus from here. All right. I am worried. All right, I'm human. I got emotions. So we make a bullish engulfer here. That's giving me an interesting sign. So maybe we come back, we test that bullish engulfer and go on up. That's what I'm thinking. I'm letting you know what I'm thinking in the moment. All right. Are we going higher? Yes, we are. Bingo. I had this thing planned out from the beginning. What did I say? I said it may come here. All right. We had this order block mitigated 2 times already. All right. Did I think that it would stand the 3rd time at below the 50%? No. I'm thinking that it's not going to last. We're probably going to be going up higher if I'm going to see the return to impulse after this break of that higher low. It's probably going to come up and touch my head, right? And that's what it did. Boom. All right. I got this. I don't know if that was that wasn't a 1 hour time frame. I think there was a 3 minute. Let me check. Was it a 2 minute order block? I think it was a 3 minute. I should have put my little number up there. Yeah, it was a 3 minute. Yeah, you see it? I refined it up there. Okay, so we're going back to the 1. Hit my 3 minute, gave me a lovely rejection. I'm very happy about that right now. I put my stop loss above the high of the order block that I entered in on, and I'm in this trade. Boom, and it's going, and I'm feeling pretty good. Let me get rid of these Fibonacci's, my nachos. Hold on. How come I can't select this thing? What am I doing wrong? Thank you. All right. So it's coming down. There's a lot of, see that inefficient movement of price there? All right. The inefficient move of price, the imbalance is going to fill that imbalance up. So I'm feeling pretty good about where this trade is going, right? Boom. Filled in the inefficiency. Now I want to see these lows broken, right? Boom. Now it broke that low. Maybe we get a return to impulse. That'll be up and around here somewhere. No problem, right? Now, that makes me think, hey, let me mark out a doggone order block. We done broke structure to the downside. Maybe we get a return to impulse. All right. I got this like this, right? I moved this all the way over here. Let me see. Did I mark that thing right? Why do I got this thing crazy? What am I confused about? All right, I got the last. Yeah, that's right. Because I saw this small bullish candle up here as well. It came here, then we gave us the bearish bullish bearish formation. So I'm looking at that move. I'm going, okay, let me take this. I had it like so. Yeah. Matter of fact, I think I marked this in on the two minute. Yeah, I certainly did. Look at that. Yeah, I marked it in on the 2 minute, and I had a nice size order block on it. I had a nice size stop loss on it. Excuse me. But then I was looking at it. I was like, all right, we got 1.5 pips. All right. Once price came up and tagged me in, it took its time too. Look at that. Because I was like, oh man, I thought I might have missed my opportunity here. Right? Boom. Tags me right in. I mean, it was a touch and go. As soon as it did, because it moved fast, it was moving fast. I went to break even as it dropped down here. I was like, I like to go to break even at 3R, okay, or break even plus at 3R. All right, and there are times where I take out all of my initial risk at 2R. Just take it out without moving the stop loss. All right, I do both, but for the most part, I like to wait till 3R, then I'll move to break even plus and leave about a 10 to 20% runner to depending on how the trade is and what the set looks like and the structure. All right, so I've double dipped. I've double dipped on the pullback for a return to impulse. Now I know I've done spent a lot of time yapping on this one, but this I'm in 2 trades now. All right, and this mark here, you see, that mark there is 3R for the original trade. All right, what do you think this one was? You know, I mean, with a stop loss of just over just under 2 pips. All right, where do you think that 3R was? That 3R was a little bit before this, right around here. All right, this thing ended up 12.7R. It just dropped, and it dropped hard, and I was happy when it came back up here. I was like, oh no, don't do it. But I only had my 20% runner in the second trade. You know what I mean? So I was good. I was good with it. And then it pulled back one time, then it came back. Why did it pull back? Again, it broke that low. And when you break a structural low, what are you expecting? A return to impulse. And what did it return to? Return to that order block that sent it down there in the first place. Well, watch. You see how I would have marked this? See that little doji candle right there? I probably would have included that if I was going to take a third trade, but I wasn't looking for a third trade. I could have entered again right here. After making this, I could have got out of this trade, but I did. I took most of it out, and I could have got in a third trade. And it would have just, boom. Dig. I didn't do that. Now, we're not going to go into whether I should have or not, but I didn't. Okay. Doggone it. I wish I would have. But that's the way that played out, man. And so, you know, between the two, I took partials, okay, at 3R and left the runners to run 20% and yeah, it was both of them were 20% after I took out 80% after 3R on both of them. Okay. So you do the math on that. I was just happy with what I ended up, and that was great. There was other trades to take. Price did finally pop up, but that's beside the point. It started going sideways too, right around 11 o'clock. And, you know, that's where I usually stop trading anyway, 11 EST. So I'm hoping that you learned something. I'm hoping that you understand how you can double your trade. I mean, you can just double or triple what you're gonna what your return is by adding in another trade. If you time that, if you watch the price action and catch that return to impulse. It's before I got into smart money, I was looking for pullbacks. I said, oh, it's a good pullback. You know, it's pulling back now. I didn't know where it would stop. I didn't know where to, you know, what would be the proper place to get in. I'd wait until at the, you know, it formed a bearish engulfer and get in at the bottom of that engulfer. You know, that's retail stuff. All right. You know, smart money helps. Order block, order flow, supply and demand. Those are the things that give precision to this trading style, strategy, whatever you want to call it. Okay. So that's it. Hey, I want you to leave a comment. Let me know, did you catch your bus this morning? Did you catch it? Did you catch the EU bus? You know, if you did, let me know you did, man, so we can high five. You know what I mean? Give me a good comment. Give me a like if you like the breakdowns and you want more of these kind of videos. I'm thinking that they're helpful because they were helpful to me when I would see people break down their trades. Okay. Check out one of the videos that are on your screen now, and I will see you in the next video.